Welcome, 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 everybody. We're getting everybody coming into the room. Thanks for being here. This is the Brink SBDC Investor Series. So very excited to have everybody on board. It's going to be interactive. I try to be interactive, but it's hard with so many people, but we're going to try. There'll be some homework, some exercises as we go on. And I have some Patrick, hi. So it's nice to see some friendly faces and some newbies as well. We'll wait for like one more minute. I don't see anybody else. There's a couple more people coming in. But today we are going to go, let's see, make sure I have my thing. This is part of the Investor Readiness series. And at the Brink SBDC, I am an advisor at the Brink SBDC, Dr. Silvia Ma, and I've been an investor for over 15 years. So I really have a great insight into being in the investor's shoes. I've also taught investors to be the best investors that they can be for founders. I've also been on the accelerator side, helping founders get intros and connecting with investors. So I've been on both sides. I've also tried to start a couple of investors and been on stage like you guys all have been. And it's scary. And how do you convince investors? So really love this topic of empowering your investor relations. And for those that already have an investor relations process and how you're going through it, I was hearing you all while I was developing this, and also the new founders that are just starting their investor relations. So you'll see throughout the presentation that there's some more, let's say not complicated, because it's not really complicated. It's not like putting together an airplane, right? But it's mindfulness is being reminded also like, oh, have you been thinking about this? Have you connected in this way? And I'm going to give you as many examples as I can, because sometimes examples you're like, oh yeah, I forgot to do that, for the experienced entrepreneurs out there. And then for the newbies, it's going to be kind of an onslaught of information, but just carry it in and see how you can come together in a different form as you're going forward, because the investor relations process is a journey. So I'm going to start sharing my screen. And I know, okay, perfect. I can see the chat at the same time. So I try to keep the chat going so that, perfect. So this is, let me just get to, enter full screen mode. I can still see the chat. Yes, perfect. Okay. I just need to put myself together. So basically, we're going to go through 10 best practices to help you navigate this critical aspect of entrepreneurship. But I wanted to kind of start off with three things. One is I want us to all share some challenges in the chat of what has been like the number one challenge. If anybody knows me, I go straight to the point. First saying, okay, the elephant is a room that we've all been challenged by investor relations from the investor side and also the entrepreneurial side. So why don't you all put in the chat, what are your top challenge? Or if you're not part of an investor relations kind of process yet, what are you most scared about? Right? I know it's kind of like, oh, and then it's like out there, but when you name it, sometimes it kind of goes away. Or when you name it, you can say how I can combat that. So as you're going forwards here, please put some things in the chat. The three things that I see consistently from entrepreneurs, and as soon as I see something in the chat, I will, okay, here. Oh, yes. One of them is I'm a fraud. Number two is proving there is a market for my product. So the first one, wow, that's very powerful, right? Is a lot of entrepreneurs like, I'm creating something out of thin air, right? Out of something that I've either innovated on or I've built or I think I can get a patent on. Is this something even that a customer will want, right? So I don't know where that's coming from, but there's a lot of things that you can take ownership of and chip away at the realism of it, right? So you have an innovation, even if it's in an idea stage, you can go out and do customer discovery super early. So you're like, okay, actually, I'm not a fraud. Somebody actually wants to buy this. Somebody actually needs this. Interesting, right? So if you, even at that stage, if you start talking to investors, if you are, you're like, okay, this is what I've learned. So keeping that kind of posture of inquiry, that posture of I'm learning so much from my customer, and that's the customer that's going to buy from me to build that business model. Interesting, right? It becomes not a fraud, not fraud like binary decision. It's more of just, this is a journey that I'm going to be on with investors, with other stakeholders. So that's one way of kind of combating that. The next one is product. There, proving that there's a product for market for my product. And that's another really heavy piece. One piece is trying to, with this one, it's more of seeing what you can control in this very risky arena of deciding what your market is, or even deciding what your valuation is, right? So it's very nebulous, it's very complex, but how can you say, okay, can I do some comparables of a market that's out there? Can I do some comparables of other companies that are similar to mine or my competitors? So then there is a market, right? So that proving is a very powerful word, but how can we put some structure on that risk of how big is that market, or if there's a market out there. So, okay. So another person said, communication gaps, particularly as our business timeline shift. Yeah, that's always going to be hard. And the one way of really looking at that and, meeting that challenge where it is to actually increase your communication. Us as investors, whenever we haven't heard from somebody, we always think, oh, something's wrong, even if it's going all right. So the more that you can communicate saying, hey, I've learned this, I've done this, again, de-risk that journey and make sure that you're communicating even more. Trying to strike the right balance between what's too much and what's too little, what's relevant, what's not, too much detail versus not enough. That is another challenge that is real. Thank you for sharing that. One thing to combat that right away, I'm not trying to say these things to solve. It's very hard to solve these big problems, but I'm just giving you immediately some things that might help, right? One way of striking that balance and understanding what's relevant, but what's not, is that you own your narrative, right? You own your narrative of how you communicate and manage your investor relations. And only you can kind of set that up. And that's why investors come to you, right? Who want something, your innovation, your company that you are building in the way that you think the market needs it, the customer needs it, and the market can bear, right? So I have seen multiple different ways of interacting with investors. I mean, it's as varied as the hues of a rainbow. I say that a lot because entrepreneurship is hues, not colors. So one way to do that is to own, hey, I'm going to communicate in this way. I'm going to have these bullets that I'm always consistently communicating to investors, or I'm going to be as transparent as possible because my values are transparency and resilience, whatever that is, so that investor understands where you're coming from and they want more of you, right? So there's not an equation of how much, how less, how this, but it is yours. And that we're going to be talking about that connectivity between the entrepreneur and the investor. And that's the magic of really, really great investor relations. There's a couple of more here, 2 more. Great. Thank you. Communicating your message to investors, the pitch deck, all the overwhelming presentations and company valuation, different perspectives. I completely understand. I was on a call just right before this one, and the entrepreneur's like, oh my gosh, I have to have that pitch deck. And there's Gust profile for San Diego Angel Conference. And then there's Angel List. Then there's another investor call. Wow, there's so much. How I recommend any entrepreneur to kind of get through this all is, I love a good data room, and data rooms typically is like more outward facing. You want to make sure that the investors have a place to look at all of your data, all your executive summaries, your pitch decks, your profiles, your financial projections, all of that. I recommend to all entrepreneurs to have your own kind of list of that data set, of that data room for yourself. Not all the Google Drive that you have, because that gets a little bit overwhelming. Thank you for that question. But what is it that's one step removed from your public facing pieces, so that you do have, like you're saying, it's all of the different types of pitch decks, but what's a good tried and true, let's say 20 slide deck that you're very comfortable with? And then you can say, oh, I can do a 10-minute here, a 5-minute here, a 3-minute here, from that set of really great documents. That anchors you, that decreases that stress, right? And allows you to show up in your best way, instead of trying to be like, oh my gosh, I have a 3-minute here and a 5-minute here and this and that. I know it's overwhelming, but that's one way that when I sit down with an entrepreneur who's a little bit overwhelmed with all the craziness, it's like, okay, what can we do that's the core of who you are as a startup? Oh yeah, that's great. Great recommendation. They use Notion for the data, which is awesome. I love Notion. Notion is a platform that kind of is, if you're looking at it's kind of like a website by Google Drive per se. So it's organized. It looks like a website. It looks like a data center of sorts, and then you can have links everywhere, but it's organized. You can put tables and all that within one big Notion, let's say work sheet and work bench, I think, because as a scientist, sorry, I go down that path. So thank you for that. That's great. And another person says, market for my product isn't 50 million. Hence the business was characterized by investors as a lifestyle business. Okay, great. Yeah, that's my number one piece here. Not exactly, but I'm going to go ahead with my presentation, because that is one piece of this chasing traction challenge. I call it the chasing traction challenge. It's kind of the same thing as like investors put you in a box of lifestyle because it's not this much, and then you're stuck there. And they're like, well, whenever you transform to, let's say, a platform, or if you get to this traction, come back to us. If you meet these milestones, come back to us. That is something that you're always going to be chasing. And I'm going to be answering your question about the lifestyle in just one second. But this chasing traction piece is you want to do it, and you're just going to be going down this chasing path, instead of saying, okay, I'm going to sit back and say, what is my value to my customer? What is my value proposition? What are the traction pieces that I can get to early revenue with those customers, or early grants, or early anything, so that I can show traction faster, right? Not that my investor wants me to show this traction, this traction, this traction, therefore I'm going to go after it. It's more of like, who is my customer? Do I really understand that customer? Do I have product market fit? And how can I make traction around that piece? Because any investor is going to be like, you got it. You got that customer. You understand that. And I want to invest, or I want to interact with you so that we can get this funding solidified. The question of the market for my product isn't 50 million. Some investors want that high rate of return. They want that market to be ginormous. And if you're not in that bucket, then they call you lifestyle, right? I'm not that kind of investor. I am more of like, what is the business model? What is the structure that you're building? And if it's truly something that is a service-based business, which is more lifestyle, or that you're going to be around forever and not exit in a way that is, let's say, 50 million, that is something to have a conversation about. What do you want to achieve in that business? Now, you can have a business that returns 2x, 3x, 4x, 5x, 10x to investors. You have to find the right investor that wants that type of return, because you might be talking to an investor that wants that high return, and that's never going to be an investor that champions you or advises you well. They will advise you against all costs, do that, instead of really building a solid business. And there's some people that want to build with you, investors want to build with you a sustainable, solid business and not have that, let's say, market size. So just kind of putting it out there. So the two other challenges that I identified was costly moving goalposts. So sometimes investors may continually shift expectations, not just only traction. And they want, like, my criteria is this, you need to fit into that, right? When people start thinking that, doing that way, sometimes that investor relations gets more, it gets smaller and smaller and smaller, and that entrepreneur wants to fit into that box, and you might not ever fit into that box, and that's okay. Then that means that you have to sit back and say, who is that investor that I'm going after? Communication gaps. So misaligned expectations can lead to frustration on both sides of the relationship. So really be really communicative to both sides. If they're, let's say, a fund, and they're not allocating capital, you might not fit into their investment thesis, and that's okay. You need to be able to walk away to another opportunity. Next up is wins. Let's chat up. What are some wins that people have had? I know one person on this call who won STAC a while ago, so that was a win. But anything else that isn't in this investor relations piece? As you're building that out in the chat, I want to go after these three pieces. These are examples from my portfolio companies. Patience pays off. And then the building trust is another win, and expanding the network, right? So I'll give you an example. An entrepreneur and I worked together to create an SPV, which is a special purpose vehicle. And it's just a vehicle like a small fund of sorts. And people put money into the SPV. It's an LLC. And they invest collectively into one company. It's not anything to do with a fund, in that people put money together and then invest in what that general partner wants to invest in. And it should have been closed in 3 months, right? We should have had about 20 investors. We closed it in 3 months. We should be done. But it dragged on to 6 months because of a lot of things, volatility of the market, investors not being willing to go forwards. And instead of being defeated, the entrepreneur and I always had a positive attitude and waited for the investors to be ready to invest. And we got 5 more investors because they mostly were really happy we gave them the extra time without stress, right? Sometimes it's like, okay, there's a deadline, there's stress around that, there's a positive and negative to that deadline. And we extended that deadline, and we said, okay, we know that we want you on the cap table. We want you to be part of our cap table on, well, our SPV, and be able to support this entrepreneur. So we are willing to wait for a little bit longer, so that everybody can come in, so that they can bring the value that we would love for them to be part of the company. Anybody else wants to share any wins? Please put it in your chat. Okay. Okay, great. So this, thank you for being so responsive. It says we are preventive heart care. We have our first investor, we have MVP, and our revenue generating successful case studies. These are the wins of our startup. Great. And I think that, you have your first investor, and that's a huge win. So how can you leverage this whole workshop is about leveraging and polishing this investor relations piece out of all the gray area that's out there. So that first investor is super, super important, right? That first investor can actually influence other investors out there. That first investor, through that influence, can say, hey, colleague A, B, and C, would you be willing to come in? Because I really like the startup that I invested in. Here is what I have evaluated on this startup, and therefore you need to come in. Another way that they can influence is, I'm in. Okay, entrepreneur, who have you been talking to? Can I get on a call with somebody who you have been talking to as investors, so that we can talk about what this investment opportunity looks like? And lastly, that first investor can actually follow on, right? So they can say, I'm investing in you. And when you get to certain milestones, then you can come back to me and ask me for more investment. Typically, any investor who invests in the early stages knows, if they've gone through any kind of education, that they have to carve out a little bit of money for that follow-on investment. They can decide yes or no, right? But they should have enough in their bank accounts in what they're doing to be able to make that second investment. So really important to say, okay, my win is my first investment. How can I leverage as much as I can from that? Okay, this is one question here. Questions fielded in each conversation have made the pitch deck stronger, and people have asked at the end of most conversations how they can help. The answer is always a request for someone else to speak to. The pre-seed round is now more than 75% subscribed. Great comment. So I read it out loud, but what she's trying to say is that when they have conversations with investors, the last thing that is asked is, what can I do for you? And that entrepreneur says, introduce me to, who else can I talk to? One or two people, right? That allows it not to be a question on, can you invest in me? Because that gets a little bit like dicey. Maybe they're not ready to invest. Maybe they feel the pressure. They want to evaluate, but it's very easy to be like, I can introduce you to one or two other people, no problem. But so that's a really great way of doing it. And then the win and the results for this entrepreneur in the chat says they have been able to secure 75% of their pre-seed round by not necessarily first asking for money. There's a red flag in my book always whenever I ask an entrepreneur, right? What are you building? How are you doing it? And they say, if we get money, we'll start building. Or if we get money, if we get the funding, we'll start. It's like you can start with zero money by doing customer discovery, by meeting with mentors and asking that exact question. Can you introduce me to one or two other mentors? And I know it's time, and a lot of people side hustle evenings and weekends. Do those things so that that investor that you sit in front of, when they ask you, what have you done? What do you need? You're not telling them, well, I just need money to start. It's more of like, we have started these things. I have done so much with so little. And now I'm looking for some great strategic investors to get us to the next level. That's a much better pitch and a much better opportunity than somebody saying, I haven't done anything, I just need some money. So those wins are super important. That building trust is number 2 that I have here. Demonstrating patience and understanding during the investment process can strengthen relationships and lead to unexpected positive results. Trust building is, let's say, the currency of fundraising. The currency is not dollars and cents. The currency is trust. When an investor trusts an entrepreneur, they are more likely to write a check. When they trust other investors, they're more willing to co-invest in them. When they trust a network, they're more likely to invest in an angel group, let's say opportunity, or a syndicate. A syndicate means multiple different investors. Trust is the most valuable currency of startup investing and fundraising. So just know that that's the currency. And then, of course, always expand your network. There's going to be a lot of expansion that you do, and now you're going to be able to pick all of the investors that really align to your values instead of saying, I can only pick from the 5 people that I know. Okay, so that's a little bit of wins. The last thing that was for to kind of start this off is opportunities. And so the opportunities are that this is things, and if you say something in the chat, that'd be great. Any opportunities that you're like, wow, I got an opportunity and I did not expect this, right? So I've seen this, mentors becoming investors, and that's very typical, right? So that's like, I already heard that, Silvia, I understand that. But always remember this, a mentor who wants to roll up their sleeves and mentions that they cannot allocate financial capital, but you embrace the support and you work very well together to end up having that investor be your lead investor because they believe in the company so much. So they've just come from a warm lead, maybe giving you or investing $5,000, $10,000 very early on, or they come in, be a mentor, and they love this opportunity so much, and they can kind of open up their checkbook a little bit more, 25, 50,000, because they believe in the company. I've seen that happen so many times that I needed to say it upfront. That's how you leverage. Just, mentors become investors, but how does that actually get leveraged? This is how it gets leveraged. Strategic partnerships is investor relations can evolve into strategic partnerships that provide more than just capital. Like they were part of a hospital. Now you can have a warm introduction to a hospital to increase your partnerships there. And industry credibility. Strong investors backing can enhance your company's reputation in the market, right? So that fear of missing out of one investor to another investor, oh, if that person's going in, that must be really great due diligence. I know for me, I do very good due diligence, if I do say so myself. That's something that I pride myself on. I don't just make investment decisions willy-nilly. I really dive into the company and I do my own due diligence. And that's when I get on a call with another investor saying, this is a really great investment opportunity. I know exactly how I'm walking them through my decision-making. Therefore, I'm de-risking that investor and they will more likely invest in the company that we're talking about because there's industry credibility behind how I do my due diligence. It might not be necessarily me as a person credibility, but it's my process. So you're looking for investors that have great processes that do it in a certain way, like the due diligence and their sourcing and their evaluation and who they are in the industry, their values and their actions. Okay. So those are things that you can think about. How do I get these opportunities from investors? Up next is why this actually matters. And you probably already know this. So, follow-on funding, we've kind of covered that already. The mentorship and then strategic growth is if you have the right investors contributing to your growth, you really will have that strategic growth that you're looking for, that you have all the checks and balances. You can actually have strategy sessions with your investors. I do those all the time with my portfolio companies, right? To be able to have that back pocket strategist, that person that is right beside you, making those decisions with you so that both of you, the entrepreneur and the investor, are having that return on investment that they so want. So this was just a case study of one of our portfolio companies of San Diego Angel Conference Fund 1. It's a water purification company. And we were just talking about this at the Angel Academy two-day intensive that we had with investors of San Diego Angel Conference, is that when we finished the due diligence of this one company, right, another really well-known angel group in San Diego said, wow, you guys just finished this. Can we see the due diligence and evaluate this company? They made their investment decision in 2 weeks, which is very, very, very hard to do. But because there was really great, strong investor relations that startup had with this investment group, and that investment group leverage their relational capital, their network capital, and like our due diligence process, that we had many more investors quickly get in on her rounds, and they love what she does. She's able to communicate really well. She sent out investor reports that the investors loved, and they kept on reinvesting in the company even throughout COVID. So really important thing. And even during COVID, she needed some support, right? A lot of investors double down on their portfolio companies, meaning that if they had a portfolio company during COVID, they invested in them as opposed to a new company coming through their pipeline. So there was a lot of conversations that were done by a phone call saying, you know what, she really needs some support. She needs to be sustainable. She needs to scale. And all of us rallied around her because she had incredible investor relations. So that's why that matters, to actually scale your company. It's not just even before, right? It's before is hard, right? We all know that, right? And then you get the check, and then afterwards is equally as important to keep those relationships up. As one of the chaps says, how much do I share? How little do I share? It's really depending on you as a person and what the investors want to see. So up next is, so I'm going to go through the top 10 like best practices of doing investor relations. And again, I had in my mind that there's going to be aspiring entrepreneurs starting their journey and ones that are already existing. Okay, so I'm going to start this one and then go back to the chat. So number one is alignment is key. Not all investors are the same. Each has unique thesis, each has an industry focus and investment stage preference. So you want to bring the right investors alongside you. And that's very hard when you're like, I need any investor, right? Who has that, right? Is any investor to come alongside me and invest in my company because I really need to build that prototype, or I really need to build that MVP. But trust me when I tell you is that the investors that are really aligned with you, that are aligned with your same values, right, will be those investors that will stay along with you and be the right investors. That alignment is so key, right? And I know that entrepreneurs, when they say no to an investor for the first time because it is not an alignment, that actually gives them a lot more power and confidence of themselves. I have seen it over and over and over again, even though it's the scariest thing in the world, right? When you say no, or you're saying, hey, you know what? This might not be a great opportunity now for your group. Maybe I'll see you in a year, right? When I have something better, more traction, more revenue, because that's what you're looking for. The investor is like, wow, they're really thinking about my thesis, and we would love to see you back in a year, instead of that entrepreneur saying, can I talk to you in a month to see if you're ready? And you see if you're ready and see if you're ready. That doesn't go anywhere. You say pause, you're like, hey, we're not in your thesis. That's okay. Can you introduce me to one or two people that are aligned with our values and where we're are as a stage? So really, really great alignment pieces. Key strategies are that research the investors. I have spoken before about creating your investor persona. So whoever, and I know a lot of people have done this, your customer persona. Who is your customer? Okay, spend like 1 second. You're envisioning your customer, because you definitely have a persona. I think everybody is visioning that. Now shift to the envisionment of your investor persona. Who is that person? If you have them already on your cap table, great. Envision that person. If you dream of the best person who could really fit your cap table, and that's your capitalization table, and that you would want that investor to be all of your checks, envision that person. Okay, I know it's kind of like a dream if you're just envisioning it. That is the investor that you need to go after, that you need to research and say, okay, I'm going to look up that investor and see what kind of portfolios do they have. Are they talking in different places? Are they talking in different conferences that I care about, right, as an entrepreneur? Then you want to personalize your outreach, saying, you know what, I saw you on that panel at this conference, and I really loved what you said about this. Can we have a meeting? Right? So that's one way of doing it. So those are the kinds of things. And then I want to just give you a case study. I know it's Spanx, but if anybody knows her story, you know, I would say that some investors, like the people that were chatting it up earlier today, the entrepreneurs, is that some people might have called her a lifestyle business, right? But she's multi-billionaire, you know, and making great decisions and great scale. But there was investors that understood that. Not all investors understood that, and that's okay, right? She built a very sustainable, strong business that investors loved where she was. So just a really easy example that everybody knew. Okay, next one is crafting a clear and compelling narrative. And I know you've heard this before, but one of the things that sometimes when entrepreneurs go down the chasing the investor route, they lose focus on defining their why. Why are they getting up every single day to do this startup, right? So investors don't just fund ideas, they fund stories with a vision and impact, right? I always go back to when I was doing a lot of investor education for myself. The biggest thing that I took out of one of them was an investor went up there said, we want as investors to have entrepreneurs saying, I love what I'm doing. I'm passionate about this because I can get up every single moment, every single day, no matter how volatile the markets are or how the customers are not buying from me, that I'm going to get up every single day and keep on the fight. That's what we want to see. So that is not all that we want to see. Some people are like, well, I have all the passion, Silvia, but I have no investors. There's much more than that, but that is really, really important. And the reason why is this like articulation of the problem and solution is super important, because think about the investor. If that investor invests $10,000 into your company and you have a round of $1 million to be able to be successful in the next 12 months, that investor needs to be able to talk about your startup to other investors. And the easiest way for them to talk about you is through storytelling, right? They might not remember all the market possibilities and what the business model is and all the projected financials. They need to see it and be able to check it off. But what about the story? So crafting a compelling narrative helps you identify those investors funding you, and those investors sneezing or talking to other investors. Oh yeah. So going back to, there was a question about this one, research and target the right investors. The question was how, regarding find your ideal investors, what words could be used for filtering? Nice, tech, biotech, real estate, forward thinking. Yeah, I mean, that's it's like, how do I filter that? I would say that how I actually find my own investors that are aligned to my values. And I've also been on calls with entrepreneurs that are tiering their investors, because you have your top tier that really align to your values. Then you have a second tier that aligns to your values. They might not be in the same industry, but there's something that will connect them. And your third tier is something that, there's still investors that you want to go after, but they might say no because of stage or anything like that, but you want to keep them all on one spreadsheet. I recommend that highly. So how I would filter is, if you have that going back to your investor persona, if you have that ideal person that you're thinking about, identify that person and maybe identify 1, 2, or 3 people that fit that persona. I would then go to LinkedIn and I would click on that person's profile and see who are you connected to, first, second, and third, let's say, degrees of separation, and see who is following them and who is part of their network. That is one way that I do that all the time, trying to figure out who are the other people that they're connected to, because they are connected to the people that really mean something to them. So that's how I grow my list of investors. I don't necessarily do the filtering of like a Google search. I might do a Google search to find the thesis of VCs. That's like your Series A, saying the thesis, like what would the thesis say? But an angel investor, right, is not going to be like, my thesis is this, right? So that's one way of going about that, is really LinkedIn. How do you describe a persona? What words to use for value? So describe a persona is, there's a whole template that I use, but if you're thinking about customer persona, you're thinking about demographics and psychographics. So demographics are, it's an investor who's in their 40s. They have been doing investing for about 10 years because my industry is super complicated, or what I'm creating is super complicated. So a newbie probably won't be able to look at it with discernment. And then psychographics would be, they love to hang out at Starbucks. They love actually giving back to a university. What university are they connected to? All of that would be like the persona of who they are, how they show up in the world. And what words would I describe as values? I would say that if you go online and you go to Google and you click in like, give me a list, or ChatGPT, give me a list of values, right? It'll give you values of trustworthiness, of integrity, of transparency, and all of that. So if you want to use that as your filter to find those investors, that's fine. But I think it would be equally as important for you to find out what your values are. And you will see that in the investors online. And typically, let's say how I do my values is that let's say one of my values is community building. So I'm always about championing people, about supporting others that are part of my network. I'm about also transparency. I'm going to give you an article that like demystifies angel investing or demystifies fundraising. Those are the values that I find very like those are my core values, and how I act in the world is a certain way. So you can see that in some of the investors. I'm going to move on so I get to the 10 that I have. Master the art of the investor pitch. You've seen this 1,001 times, but I want to have an activity, and I'll kind of be quiet for a little bit, is how would you rate your pitch deck on these key elements? Of course, there's like, you can have pitch decks that's 15 pages long that has multiple things here. But if you're just thinking about this, if you were pitching yourself, your company, would you invest in your company based on your investor pitch? Do you have the clarity of the problem, the solution? Do you have the clarity of how big is the market, the business model, the traction that you've had? And even if you feel like you need to have more traction, I get it. Like all of us are always like, we need more, we need to get there. We don't have as much, we don't have enough time in the day or enough resources. But how would you rate your pitch deck on these key elements? And you can write it on a piece of paper or on your phone quickly. How would you rate yourself on all 5 of these in your pitch deck? You got it? And if you cannot rate your own pitch deck because you're like, it's the best thing since sliced bread, find a mentor, find an advisor, find a best friend, find another entrepreneur that can look at your pitch deck, and you just basically say, well, how would I be rated on these 5 on this scale right here? And just ask them for their honest opinion, and have them have it a scale of 1 to 5, and just take it, right? If they give you different kinds of ratings that you're not comfortable with, that's cool. Just obtain that. Understand that it's like everybody has different perspectives, and it's like, well, how can, and then if it's really a low score, you're like, how can I do this better? Have that open posture of accepting that feedback so that you can understand what it means to be coachable. Yeah, so wonderful chat here. It's like the challenge is how to pitch a pre-revenue therapeutic discovery company. Yes. So you're probably asking about the business model and the traction because of revenue. So there's a couple of things that I've worked with some therapeutic discovery companies on, is that what are some partnerships that you can create? What are some letters of intent that you can get? Now, I was at a pitch decon and event recently, and another investor says, I don't really take traction as letters of intent and partnership stuff like that. I want the real hard truth of revenue, or an SBIR grant, NSF grant, NIH grant that has money attached to it. Like a pilot is not a pilot until it gets paid. So again, you're seeing a breadth of investors. I love when an entrepreneur can say, I tried everything that I can do pre-revenue, right? For you, it's like pre-revenue therapeutic companies, right? Yeah, it's great. We have an NSF SBIR, awesome, a patient foundation grant, and won an NVIDIA award. That is wonderful. All of those things are traction. But you have to know that some investors don't see that. Of course, the non-dilutive capital is amazing, right? So any investor is going to see that, but the winning the award, some people are like, well, award, right? But I would list it all out, and I would say, this is what we have. This is the traction that we have, and know that some people will not see it as traction. I'm being brutally honest here, right? So and that goes back to the investor persona. That investor persona that cares about seeing those things are the ones that are going to care about having a second conversation with you, and third and fourth, and get funding to you. And Rob, yeah, but we can't raise a seed. So yes, so a lot of people are having a very hard time raising pre-seed and seed. Right now, there is a definite clamp on the pre-seed seed arena, and also like post-seeds, pre-series A, even series A is having a clamp, right? So understanding the environment that we're in is like one of many things that I can kind of put out there at a moment's notice to say that. And then going back to investor persona, are you talking to the right people? SBIR and NSF and all the things that you have there, and you're winning these awards, ask those awardees, SBIR, who can you introduce me to? Who can I leverage this with? And maybe you get something that you haven't seen before. So, that's, yes, I'm not going to go political right now, but those are the things that we can do. I always think, what can you do that you have control over? You have control over the hustle. You have control over who you can connect with, who can carry on that conversation. So let me go back to here. 4 is be transparent about financials and metrics. I wanted to get to this really importantly because, again, the number one thing that I put here is build trust. I know that it's like, oh, I'm going to build trust with financials and metrics. What? But you can, right? If you do it correctly. If you're saying my metrics are XYZ and I don't know what my metrics are, or they're XYZ because everybody else has those metrics, that's not building trust. If you say my metrics are A, B, and C, because that's what's important to our customers. Therefore, we're tracking them on a consistent basis with this platform because that allows us to sell more. That's building trust with that investor. Know your numbers, understand your unit economics, your burn rate and your runway, like as if it's the back of your hand, especially CEOs. I've seen CEOs that say, I need to ask my CFO. I understand that the minutia of financials, sometimes you have to go and get your CFO involved, but at the very high level, you need to know your numbers. You need to be realistic yet ambitious with those financial projections and address any risks. I know one of my portfolio companies, she always had a really amazing pitch deck. And she knows that the number one question she got was this financial risk question that she always got from everybody. She did not actually address it in her pitch. She waited until she has a really great pitch. She talks about all of her business, the business model, how she's going to make money and all of that. And at the end, she knows that first question is that one. And she always had a slide right after her last pitch slide deck. At the end of her slide deck, so that she can answer that question right away. So just kind of, that's a little bit of maneuvering the pitch deck a little bit. The activity that I want you to do, and we won't have time today to kind of go through it, but take 3 of your assumptions in your financials. I love assumptions and financials. I usually look at the financials and then I talk to the founder about their assumptions. I'm like, talk to me about that assumption number 2, right? Saying like, why did you pick that assumption? Why do you think that assumption is correct? Where did you get that data? How do you know that? Take the 3 assumptions that you're most familiar with and write down the rationale of the assumption so that you know these are the top 3 assumptions that I'm making in my financials, and this becomes your money story. Again, going back to storytelling that we saw at the very beginning, the investor wants to see and hear your story of your company, why you're building your company, and what are the reasons you believe this financials are correct. Now, we know that you're building a financial projection based on real numbers or not real numbers. It's okay, but understanding what that story is will allow that founders to increase their trust, decrease risk, and be more knowledgeable when they are trying to invest in your company. Okay. Perfect. Number 5 is build relationships before asking for money. 3 ways of doing that is early engagement. We've kind of talked about this. It is a journey of talking to investors, going to events. I know that we had a celebration event on Friday for all of the San Diego Angel Conference applicants who went into the Gus portal and put in their applications, and the investors were there. So the people who showed up, they have one step forwards in engaging with those investors. Provide value first, provide value updates even before they invest, like sharing them with them. Hey, I know my industry really well. Can I share with you some market research? And that investor's like, oh yeah, I really want to know more about that market, because typically they're investing in that market and want to know everything that you do about that market. And then lastly is be visible. Attend investor-focused events and be visible in the startup ecosystem. I find that some entrepreneurs that are not having the success that they want, I ask them, when was the last time you went to, let's say, Startup San Diego event? They have first Mondays of every month they get together. And they're like, oh no, we don't like to go to those events. I'm like, well, those are sometimes where those investors are, or the advocates and ecosystem builders that have connections with those investors. So get active, making sure that you're adding value to your ecosystem and investors actually see that. So a case study is that, oh yeah, this is great. So it's a sustainable tech company that I've invested in. And this founder always asks for advice on the huge picture of her company. Whenever I meet with her, she's like, so like in the next 10 years, I want to do this and this. I'm like, well, what have you done in the last 6 months? She's like, no, but I want to like paint you a picture because we're seeing that the markets are doing this and like our customers are saying this and we're excited about putting these things together. That's why I want to have a conversation with her, even if it is like, you know, we do go over the last 6 months and all the stuff that she's been able to accomplish. But I love her forward-thinking view of the markets and what she's doing in the industry that she is in. And that's why investors and mentors want to meet with her. Not because of her company per se. And that's, I mean, it's an awesome company, right? Of course, I invested in them. So it's like, they're amazing. But that builds long-lasting conversations and journeys with those investors. And they want to come back for more. And you never know if an investor is going to invest in your first round, second round, third round. And if they're going to pull in somebody else, their auntie or their network person or the person that they used to work at Qualcomm. They're like, oh, you know what? I've talked to her a couple of times and I want you to come in and just like meet with her. You never know. So the more that you can share value is super important. Number 6 is set clear expectations, deliver on promises. I see this all the time is that sometimes like founders are bigger, larger than life. They're like, I can do all these things. Well, maybe not, or maybe you can, but the more that you can send regular updates, I always recommend entrepreneurs to have a couple of lists of their quarterly email out there to their investors. As investors that are already on their cap table, they get the most amount of information. Then there's a second tier of investors that are warm leads, that are investors that you as a startup are in their field of view, that you are in their thesis. And then that third tier is everybody that you're meeting, that you can send maybe a short information, but that regular update is super important. Why? Is because let's say I'm at an event as an investor and I'm meeting another investor and they're like, I invest in AI at the intersection of AI and like higher ed. Let's say I'm in higher ed. And so for me, if I meet another investor when I'm having a conversation with somebody or at a networking event, and they're like, you know what, I'm definitely really into AI and I'm really getting hyper focused on higher ed solutions. I'm like, wait a minute. I met this entrepreneur this other time. I usually pick out my phone. I'm like, okay, and I search. And if I don't have a like update from that entrepreneur, I really can't say anything to that investor. Because I can say, look, I met somebody, I can introduce you, but I really don't know where they're at. Or I look it up and I'm like, oh, I know exactly where they're at. Can, you know, and can I introduce you to that person? There's more like transparency and communication there. So that's oh yeah, what are the 3 tiers of regular updates? I'll just no problem. You're going to get this recording anyways, so just letting you know that. So the 3 tiers are your investors that you're communicating with. That's like, you know, they already are bought in. They have signed everything. You can send them let's say confidential things if you need to get their expertise, and you always have an ask at the end of everything. Then the next tier is warm investors that are in, like you are in their thesis and that they're communicating with you. They want to know more about you. They say, okay, come back 3 months later or not yet, or can we know more information? That's your second tier. Your third tier is like everybody else that could be or could not be, but that everybody else is going to get a very watered down view of just a couple of bullets to let them know that you're still alive, right? Because in the startup world, a lot of times, with so many startups failing, unfortunately, when we don't hear from somebody, typically it's because they're not around or there's a challenge. So you want to be like, no, it's not a challenge. I'm doing good. I'm doing good. I'm doing good. And I'm doing good again. Right. So hopefully that helped you. Realistic promises is be data driven and don't overpromise, right? I'm a scientist, so I would much rather say, get told the customer is this is how the data is panning out. And this is what we can accomplish in the next 6 months. Clear milestones is communicate timelines effectively. And then bring them in, connect with investors for scaling support. So a lot of times entrepreneurs don't want to bring an investor in for support. If you bring them in, they're more bought in, right? When you co-create with somebody, they are more brought into the whole fold. So that's number 6. I'm going to run out of time. So number 7 is cultivate investor advocacy. So a lot of investors love to be advocates for the startup ecosystem. So the more that you can build relationships with investors and they feel personally invested in your success, they will connect you to the right people, even if it's not the right, let's say, thesis on their end, or like you don't fit their thesis right away. But if they introduce you to somebody else and you follow that process, that speaks volumes to that investor. They're like, oh, they followed up, they did this, they did that. Maybe they can put you on a podcast or get some PR for you. All of that is part of this relationship building. And if you have that kind of posture of they can do advocacy for you, it becomes a win-win for everybody. Okay, number 8 is handle tough conversations professionally. So, whenever you do have conversations that are a little bit tougher, be proactive of having those conversations. I know that one of my portfolio companies, I won't digress too much, is that she went to like a big conference, met an investor. The investor had tons of questions and she felt so deflated. She called me that night saying, I met this investor. We were looking forward to his meeting him. I'm like, yeah, we were. What happened? And she's like, look, I had really hard conversations. He wanted to learn everything about the projections and this and that. And she goes, I just answered all the time with what I say. I do know this. I don't know this. I'll get back to you on this. And she was very professional. She got a check from that investor. He said, look, you didn't know all the answers and that is okay, but how you carried yourself through a really tough question and answer, I appreciate that and I'll invest. So just know that how you handle things is equally as important as the answers that you have. Number 9 is avoid common investor communications mistakes. So we've already kind of go through over promising and under delivering, inconsistent updates. Ignoring feedback is one thing I've alluded to a little bit, is be as coachable as possible with investors. And also only communicating when money is needed, right? So some entrepreneurs that even I've invested in, the only time I hear from them is when they need more money. But I never hear from them when things are going well or when they need some support or when they need some advice, right? I would love to be asked that. And then I get folded into their company more, and I would be more likely to invest a following round. So how you can do an activity, after our session today is do a self-audit. Is what are 3 investor communication habits you can improve? I know that's kind of hard. It's like, oh, I'm good at everything, right? But I know it's hard. But think about what are some things that your friends have said you can improve on, right? Sometimes your friends are like, hey, you know what? I need you to text me more often because I don't hear from you very often. Or, hey, whenever we especially for me, I'm just being very vulnerable. It's more of like, okay, I shut down pretty quickly when something kind of gets ugly in a conversation. So I know I'm always working on that. I'm always working on don't shut down, open up, be open to criticism, be open to having a conversation to gain more clarity. So then I don't shut down. So knowing that, you're like, okay, how does that apply to my investor communications? And just put 3 that you're trying to work on. That would be fantastic. And last, but certainly not least, and at the very end of this, is that keep investors engaged post-investment. We alluded to that at the very beginning too, is that You can have that investor relations happen and then you get the check, but the most important thing is that follow on. We know for the customer cycle is that it's easier to keep a customer, right? That customer retention is easier than customer acquisition. Same thing with investors, right? That investor retention is easier than investor acquisition. So look at this, 3 times the amount does that investor follow-ons. So that potential is pretty high if you communicate correctly, if you talk to them, keep them in part of the journey, they will reinvest in you. So so that's the end of my presentation. Thank you for being here. I know I'm 1 minute over. I'm so sorry, but we've had some great conversations through chat. Again, we're always available. This is the Brink SBDC, and I'm Dr. Silvia Ma. I'm one of the advisors at the Brink SBDC, and I'm just so excited that we had this conversation today, diving deeper into investor relations. Know that it is a gray area of investor interactions is as varied as the hues of the rainbow. So the more that you listen to the different examples that I give, you're like, oh, I could have done that better, or oh, I can have an opportunity that I didn't see before. So, and self-evaluation is super important. The more that you can self-evaluate, the better you will be. And if you can't do that, bring some mentors, bring some advisors. We have advisors here at the Brink, or other entrepreneurs that are going through the same thing. So thanks for being here today. See you guys later.